When we calculate the stock reserve is calculated when they give invoice, we should calculate the stock reserve. Credit side, we should show the profit included or the stock reserve on goods sent on consignment. Here, credit side, closing stock. Debit side, to stock reserve on closing stock. Whatever the amount he has done as a security deposits, that is bank or bills receivable, 1 lakh rupees he has done. Outstanding subscription of the current year added. Outstanding of the previous year, we should deduct it. Hello my dear students, I am Rajay sir, faculty, Department of Commerce and Management, Vidhyaashram First Aid College, MYSURU, a temple of excellence. My dear students, in today's session I am going to handle subject Financial Accounting 2 for second sem BCom, and the topic is revision on accounting for consignment transaction and accounting for NPO, non-profit organization or non-trading concern. Now first problem, Mayuri Bicycles Company MYSURU consigned 1500 bicycles to People Cycle Mart. So here Mayuri Bicycles is the consignor, People Cycle Mart is the consignee, Mangalore to be sold on consignment basis. The cost of each bicycle was 1800 but invoiced at 20% profit. So we have to add 1800 plus 20% profit. If we add on that, you will get the actual invoice price and the consignor, the profit price, and they paid rupees 150 per bicycles for packing and freight and insurance. So this is the expenses from the side of consignor. Okay, during the transit, 10 bicycles were damaged in an accident and the insurance company paid 80% of the claims. So during the transit, out of 1500 bicycles, 10 bicycles were damaged and insurance company is paying only 80%. Remaining 20% is called as abnormal loss. The people traders received the consignment and spent rupees 100 rupees per bicycles for freight and entry tax. So it is the direct expenses, rupees 100 rupees per bicycles. Who has spent? The consignee has spent. They accepted the bill drawn by Mayuri Bicycles Company for 1 lakh rupees. This is the security deposits which has to be paid by the consignee to consignor in the form of bills receivable as an advance. People's traders spent 14,000 rupees for sales expenses and advertisement. See, it is a indirect expenses. Sales expense and advertisement is indirect expenses. So this item should not be considered while calculating of closing stock and working note, but we can consider this item while doing the problem consignment account. They sold 800 cycles for 2300 rupees each on cash basis. Totally we have sent 1800 bicycles. Out of that, 10 bicycles damaged. The consignee received only 1790 bicycles. Out of that, how many cycles he has sold? He has sold 800 bicycles for cash basis and remaining 400 bicycles for credit basis. Remaining cycles which are unsold is called as closing stock. However, they could not recover 60% of the amount from the customers who purchased on bicycles on credit basis. They are entitled to 10% commission on total sales, with which includes 2% del creditor commission. So what do you mean by that? See, 10% commission on the total sales. So how many total sales? What is the total sales? 800 plus 400 equals to 1200 is the total sale. On this amount, they will pay 10% commission, total commission, ordinary commission, and 2% del creditor commission on credit sales. They will pay 2% del creditor commission. They settled final balance due to consignor by sending a bank draft. Prepare necessary ledger accounts in the books of consignor. See, journal is not needed. So let's do only ledger account. Okay. Now, working note, cost price of the cycles. What is the cost price of cycles? 1800 is the cost price. See here, 1800 is the cost price of each cycle plus 20% profit. Let's add 20% profit. So 1800 into 20 divided by 100. 360 rupees is the profit. $360, add the 20% profit equals to 360. If you add it, 2,160 is the invoice price of the bicycles. Again, calculation of accidental loss. Now, cost of 10 bicycle. Now, what is the cost of 10 bicycles? 10 bicycle cost is 1,800. Add expenses of consignor. So, what is the expenses of consignor here? So, how much he has spent? He has spent 1,800 per bicycles into how many cycles we lost? 10 cycles equals to 18,000 is the actual cost of the 10 bicycles. Next one, add expense of consignor. So 150 rupees he has spent into 10 bicycles equals to 1,500. If you add it, it is 19,500. 19,500 is the accidental loss. Insurance company here, insurance company is giving only 80% of the claim. So 19,500 into 80%. So let's calculate 19,500 into 80%. That means insurance company is giving only 15,600. 15,600. Remaining is abnormal loss. 3,900 is the abnormal loss. Now let's go to the calculation of total sales. What are the cash sales? So 800 bicycles sold for cash basis, 400 cycles sold for credit basis. Now 800 bicycles sold for 2,300 rupees. So 800 into 2,300. Again 400 bicycles sold for 2,500 into 2,500. Now let's calculate how much they got. So 800 into 2,300 equals to 18,40,000. 18,40,000. Again 400 cycles into 2,500 equals to 10 lakh. Total it is 28,40,000 is the total sales. Total sales. Again calculation of commission. See, on total sales 10% commission we have to pay. On credit sale you have to pay 2% del creditor commission. Okay. So ordinary commission 10% on total sales 28,40,000 into 10%. So equals to 2,84,000. Again del creditor commission 10 lakh into 2%, it is 20,000. So total it is 3,04,000 total commission. Next point, calculation of closing stock. So total cycles consigned is, how many cycles we have consigned? We have consigned 1,500 cycles. So 1,500 cycles. Cycle lost during transit or damaged during transit is 10 cycles. So it is 1,490 cycles. Goods in transit nil. We don't have any goods in transit. Again, cycles sold. How many cycles sold? 800 plus 400 equals to 1,200 cycles sold. 1,200 cycles sold. So if we deduct that, 1,490 minus 1,200 equals to 290 cycles are unsold or closing stock. Again, calculation of value of closing stock. So invoice price of the 290 cycles. What is the invoice price of each cycle? Here it is. The invoice price is 2,160. So 2,160 into how many cycles? 290 cycles. So 2,160 into 290 cycles is 6,26,400. Again, the expenses of consignor. So here Only take direct expenses, don't take indirect expenses. What is the expenses of consignor here? So he has spent 150 rupees per bicycles. So 150 into 290 bicycles. How much? Into 290 bicycles. 43,500. Again, expenses of consignee. Don't take indirect expenses, only take direct expenses. So how much he has spent? 100 rupees per bicycles on freight and insurance. So 100 rupees into 290 bicycles, 29,000. If you add all these things, plus 43,500 plus 6,26,400. So you'll get 6,98,900 rupees is the value of closing stock. Now let's calculate the stock reserve. When we calculate the stock reserve is calculated when they give invoice price. We should calculate the stock reserve because we are sending goods to our own agent. We are not selling goods to customers. When we are sending goods to our own agent, we need the cost price of the product, but we have sent the goods in invoice price. So let's calculate the stock reserve and deduct the stock reserve from the consignment account. Then we'll get the actual value of the or cost price of the product or total consignment. So invoice price, what is the invoice price? Invoice price is 2,160. 2,160 minus cost price 1,800. 360 rupees is the profit into how many cycles consigned? 1,000 cycles consigned. So invoice for consignment, goods on consignment. 1,500 cycles we have consigned now. So it is 360 into 1,500 cycles. So profit included here is 5,40,000. 5,40,000. Again, we have to calculate the profit included or stock reserve on closing stock. So again, invoice price is 260 minus 1,800 equals to 360 rupees is the profit included. So into how many cycles? Into 290 cycles are not sold or closing stock. So 360 into 290 bicycles, it is 1,04,400 is the profit included in the closing stock. Total consignment profit included is 5,40,000. So we have to remove it. So how to do this? I will show you in the consignment account. Now let's go to the consignment account. Goods sent on consignment. What is the total goods? 1,500 into what is the invoice price? 1,260. 1,260. So let's calculate 1,500 into 1,260 equals to 18,90,000. Again, bank expenses of consignor to bank account. What is journal entry? Consignment account to bank account. Here also consignment account to goods sent on consignment account. So the journal only we are converted to ledger. This is debit side. Here it is credit side. Okay. So what is the expense of consignor? He has spent 150 rupees for each bicycles. 150 into how many cycles? 1,500 cycles. So 150 into 1,500 bicycles, it is 2,25,000. Again, to consignee account, expenses of consignee. So here on freight and other charges, he has spent 100 rupees for each bicycles into how many cycles he got after damage of 10 cycles. He got only out of 1,500 cycles, he got only 1,490 cycles. So 1,490 cycles he has spent 100 rupees for freight charges and 40,000 rupees for here. See here. So on 1,490 cycles, he has, this is 1,490, this is 1,500 cycles. Okay. See, out of 1,500 bicycles, 10 bicycles were damaged. He received only out of 1,500 cycles, he received 10 cycles damaged. 1,490 bicycles only he got. Okay. For this amount, he has spent 100 rupees on freight and entry tax, and also here 14,000 rupees on sales expenses. So here it is 14,000 and 100 rupees for, so 1,490 into 100 equals to 1,49,000. 1,49,000 on freight expenses and selling expenses is 14,000 he has spent. Again, commission of consignor. What is the total commission? Total commission is 3,04,000. 3,04,000. Again, stock reserve. So we have here we will get the profit included in the consignment. See, goods sent on consignment, 2 goods on sent on consignment. Again, stock reserve on goods sent on consignment. To buy closing stock reserve on closing stock. It is the opposite. So here, debit side we have to write goods sent on consignment. Credit side we should show the profit included or the stock reserve on goods sent on consignment. Here, credit side closing stock, debit side to stock reserve on closing stock. What is journal entry? Consignee account to consignment account. Here also, accidental loss account to consignment account. So closing stock account to consignment account. Stock reserve on goods sent on consignment account to consignment account. Total consignee, how much he has made sales? Total sales made. Total sales made is 28,40,000. 28,40,000. Someone will deduct the amount here. See here, 10 cycles he has. However, he could not recover the 60% of the amount of customers who have purchased bicycle on credit basis. 1 bicycle he has purchased. So someone will deduct the amount. See, for example, what is the credit sale? So 2,500 is the credit sale into 60%. Yeah, he not recovered the 60% means what? So 2,500 into 60% means 1,500 we could not recover, no. So someone will deduct the amount here. In some will deduct the amount here, remaining amount they will take, but I'm neglecting that point. I'm taking full amount here. Okay. Again, by accidental loss account. So what is our accidental loss? See, keep this in mind. This is abnormal loss. This is accidental loss. 19,500. So 19,500 by closing stock accounts. So what is the closing stock? Value of the closing stock is 6,98,900. 6,98,900. Stock reserve on goods sent on consignment is 5,40,000. Now let's add this 28,40,000 plus 19,500. 6,98,900. 5,40,000. So total it is, total value is 40,98,400. So which is more? Let's calculate here. It is credit side is 40,98,400. Let's add debit side. 18,90,000 plus 2,25,000, 1,49,000, 14,000, 3,04,000. So this is 2,160. Okay. So 1,500 into 2,160 is 32,40,000. So 32,40,000 plus 2,25,000 plus 1,49,000 plus 14,000 plus 3,04,000. Total amount is, here is debit side is 3,93,2,000. So which is more? Credit side is more. So that's why I written credit side both the side 40,98,400. Now let's identify the difference. Minus 40,98,400. The difference is 1,66,400 is the profit and loss account. This is the profit we got. Again, let's go to the consignee account. So, what is the total amount or what is the total sales he has done, consignee has done? It is 28,40,000. 28,40,000. Out of the 28,40,000, what are the amount he will deduct? He will deduct whatever the amount he has done as a security deposits. That is bank or bills receivable. 1 lakh rupees he has done security deposits. Here 1 lakh rupees he has done as a bill, BR bills receivable. Again, he will deduct his expenses he met on the consignment. Again, he will deduct his commission. Remaining amount will be sent to the consignor. So, what are the amount he will deduct? First one, 1 lakh rupees is security deposit. Again, his expenses. So, what is his expenses? Here 14,000 plus 1,49,000. So, 14,000 plus 1,49,000 is 1,63,000. His expenses is 1,63,000 is expenses. Again, his commission. What is his commission? 3,04,000 is commission. So, 3,04,000 he will deduct his commission. Remaining amount transferred to consignor bank account. So, it is, let's add both the side. 28,40,000. Here also 28,40,000. Remaining amount difference he will pay to consignor. 28,40,000 minus 1,63,000 minus 3,04,000. Now 22,73,000 he will send to consignment bank account. Now next point, accidental loss account. What is the accidental loss? Consignment to place account journal entry here is, now accidental loss is 19,500 is the accidental loss. Out of that insurance company how much is giving? So 19,500. Out of that insurance company is giving only how much? 15,600. Remaining is abnormal loss account. 15,600. Remaining is abnormal loss account. What is abnormal loss here? 3,900. 3,900 is the abnormal loss. So both the side 19,500, 19,500. Again, goods sent on consignment. So what are the total goods sent on consignment? So total goods worth is 32,40,000. 32,40,000. Again, what is the stock reserve on goods sent on consignment? 5,40,000 is the stock reserve. 5,40,000 is the stock reserve. Remaining is trading account. So what is remaining? Let's deduct this. 32,40,000 minus 5 lakh. So 27 lakh is trading account. So actual worth of the goods we have sent is 27,40,000. Here we have deducted the loss. So actual invoice price is 32,40,000. Out of that deduct the profit. Remaining is trading account is actual worth of the goods is 27 lakh. Now let's go to one more problem. Prepare a income and expenditure account and balance sheet when opening balance sheet is not given from the following receipts and payment account. Prepare income and expenditure account and balance sheet. Adult literacy organization as on 31st/3/2017. Now this is the problem they have given. So opening balance of cash 4,000, at bank 15,550. Again subscription received 1,200 on 2016. That is current year 26,500, and for next year 2018 is 500. Sale of old newspaper is 1,250. Government grants 12,000. Sale of old newspaper actual worth of is 5,000, but we have sold for 3,700. It is a loss. Next one, interest received on fixed deposits 450. Let's add both the side whether it is correct or not. Let's check. So 4,000 plus 15,550 plus 28,200 plus 1,250 plus 12,000 plus 3700 plus 450. So it is correct in debit side. Let's go to the credit side. 200, 1850 plus 3000 plus 18,000 plus 7,000 plus 3,600 plus 6,500 plus 3,000 plus 10,500 plus 3,000 plus 3,200. So both the side is correct. The problem is correct. Now payment side, general expenses payment is 3,200, newspaper 1,850, electricity 3,000, fixed deposits with bank 18,000. When we have taken the fixed deposit to 30th 6 2017, 10% per annum. So let's calculate the interest from fixed deposit is only 450. So what is the actual fixed interest we should receive? So on 18,000 we should receive 18,000 into what is the rate of interest? 10%. So it is 1,800. Out of 1,800, when we have taken the fixed deposits on 30th 6, means for 6 months we should calculate. So what is the date of this? So the date of this balance sheet or this current year opens in 1st 1/1/2017, ends on 31st 12/2017. So we have taken the or we have kept the fixed deposits on 30th 6 2017, means so 6 months. After 6 months we have kept the deposits. So we should calculate 6% or 6 months interest. 6 by 12. So 1,800 into 6 divided by 12. For 12 months we should calculate, but only we have kept the deposit on after 6 months. So remaining 6 months we should calculate the interest, equals to 900. So 900 rupees we should receive. How much we have received? 450 rupees only received. So that means half of the amount we have received. Remaining half of that is due. Interest on fixed deposit is due. Again, next point, books purchased 7,000, salary paid 3,600, rent paid 6,500, postage charges 300, furniture purchased 10,500, balance carried down, cash balance 3,000, bank balance 8,200. Now let's go to the subscription outstanding as on 31st 3 2016 rupees 2,000, and as on 31st 3 2017 rupees 1,700 rupees. See, any outstanding subscription of the current year we should add it. Any outstanding of the previous year we should deduct it. Keep this in mind. Outstanding subscription of the current year, add it. Outstanding of the previous year we should deduct it. Received in advance previous year we should add this, because received in advance previous year we will utilize these things or this subscription in current year. So received advance in this or current year, it should be shown in the liability side of the balance sheet. It should be deducted because it will be utilized for the next year. Now 31st 3 2017, salary outstanding 600 and 1 month rent paid in advance. See, already I told, any expenses paid in advance we should deduct in the income and expenditure account, and it should be shown in the asset side of the balance sheet. See here, 1 month rent is, so rent. So what is the rent? Rent paid is 6,500. So 6,500 into how many months we have paid? 1 month rent, or we can write 12 by 13. So for 13 months we have paid. How many months in a year? There is 12 months, but we have paid 1 month extra, means we have paid 13 plus 12 equals to 12 plus 1 equals to 13 months. So we have paid, so 6,500 into 12 divided by 13. So we have to pay only 6,000. But how much we have paid here? How much we have paid? We have paid 6,500. So 6,500, 500 rupees we have paid extra. This is a prepaid rent. So we should deduct in income and expenditure account, expenditure side, rent 6,500 minus prepaid rent 500. We should only show 6,000. Again, in the balance sheet, asset side, we have to show advance or prepaid rent. Again, outstanding salary. What is the outstanding salary? Is 600. Any outstanding expenses of current year we should add it. Any outstanding of the current year we should add it. Any outstanding of previous year we should deduct it. Any prepaid of the current year we should deduct it. Any prepaid of the last year we should add it. Okay, so 600 rupees where we have to show in the income and expenditure account. In the income and expenditure account, where we have to show in the expenses side. So add the outstanding. Again, it has to be shown in the liability side of the balance sheet. Outstanding salary. Again, on 1/4/2017, organization owned furniture 12,000 and books rupees 5,000. What is the value of the furniture? 12,000. That is the opening balance of furniture is 12,000. Opening balance of books is 5,000. Now let's go to the opening balance sheet. Let's prepare. So what is the cash in hand? Opening balance of cash 4,000. Opening balance of bank 15,550. So add both the amount. So here previous year outstanding subscription 2,000. So previous year outstanding subscription 2,000. Again opening furniture of the opening value of the 12,000 of furniture. Opening value of books is 5,000. Add both the side. So this is the capital fund of the previous year. So in order to identify the capital fund, we have to prepare the opening balance sheet. Again, let's go to the current year income and expenditure account. So first one, come to the expenses side. So we have to take general expenses, income and expenditure, newspaper expenses, income and expenditure, electricity, income and expenditure, fixed deposit is a asset. So it should go to asset side of the balance sheet. Books is asset, salary, income and expenditure, rent is income and expenditure, postage, income and expenditure, furniture is an asset. Again, cash in hand, cash at bank, asset side of the balance sheet. Come to here. So opening balance, leave it, subscription, income and expenditure, sales of old newspaper, income and expenditure, government grants, income and expenditure, sales of old newspaper, income and expenditure, interest received, income and expenditure account. Now let's go to the problem here. So by general expenses, here what are the amount here? 3,200. Again newspaper, same amount, it is the expenses 1,850, expenses side 1,850. What is the electricity charges here? 3,000, income and expenditure 3,000, we can write here 3,000. Again salary. So while taking the salary adjustment, he has given adjustment. What is the adjustment? Outstanding salary is 600. We should add the current year outstanding. So we should add the current year outstanding. Salary of the current year is 3,600. Add the outstanding. So add the outstanding, outer column 4,200. Again rent is 6,500. So deduct the prepaid rent 500, remaining outstanding 6,000. Again postage charges is an expenses 300. Loss on sold of old furniture. So here look at the furniture value. So how much actual value is 5,000, but we have sold for 3,700. So what is the remaining amount? So remaining amount is income and expenditure account, loss on sale of furniture. Loss on sale of furniture is 1,300. Now come to the subscription for the current year. So subscription for the current year, how much we have received for the current year subscription is 2,700 is 26,500. 26,500 is the current year subscription. Again come to adjustment. So in adjustment, what is the outstanding subscription of the current year? So and as on 31st/3/2017 is 1,700 is the current year outstanding subscription. So this is 1,700. Add the current year outstanding subscription. So let's make here this is 1,500. Okay, 1,500. So add the 1,500. It will become 28,000. 28,000. Again sale of old newspaper is 1,250. Here sale of old newspaper is 1,250. Government grants 12,000. So write government grants 12,000. Again interest on fixed deposits, already showed you. So what is the actual value of the fixed deposit? Fixed deposit value is 18,000. Out of 18,000, so 10% is the interest, means 1,800. So 1,000 when we have taken the fixed deposits on 30th/6/2017 means after 6 months. So we have to receive the interest on fixed deposit for 6 months. Okay, so 6 months, calculate only 900 rupees we have to receive. But how much they have given? Only 450 rupees they have given. Remaining 450 is the outstanding. Where we have to show this 450 in the income and expenditure account. Income side we have to add it. Again we have to show it in the asset side of the balance sheet. Asset side of the balance sheet. So again here, so 450 add it will become 900. So add both the side. So what is the difference? So add both the side. So debit side and credit side. This is credit side. So this is debit side at the both the side. So when I added both the side, I got more amount in the credit side. Again, I got lesser amount in the debit side. So I have tallied which is more, 42,150, 42,150. Now I got the difference in debit side is 22,300 is the surplus. 22,300 is the surplus. If I got the difference in credit side, that would have become loss or deficit. Now let's go to the balance sheet. So look at the previous year balance sheet. What is the closing cash in hand and closing cash in bank? We should take this amount 3,000 and 8,200. So opening, closing cash and closing bank. Again furniture. Again purchase of the furniture is 10,500. Again furniture sold is 5,000. Totally outer column remaining furniture we have to show. Again books 5,000. Purchase of new books is 7,000 here. Purchase of, so old books is here, previous year balance sheet, old books is 5,000. Again purchase of new books is 7,000. Add it, put it to outer column. Again deposits with bank is 1,800. Outstanding interest we should add, outstanding interest 450, put it to outer column. Again outstanding subscription of the previous year. What is the outstanding subscription of the previous year? Already we are having outstanding subscription here 2,000 minus outstanding subscription of the current year 1,200. Remaining is actual outstanding subscription is 1,500. So put it to outer column 2,300. So rent paid in advance is 500 rupees. Again capital fund. So already we have calculated the capital fund here 38,550. 38,550. Again surplus here, surplus 22,300. 22,300, put it to outer column. Again subscription received in advance. Previous year how much received we have received in advance? So subscription received in advance is 500 rupees. So put subscription received in advance 500 rupees. Outstanding salary from the adjustment 600 rupees. So both the sets should get tallied. So this is how we have to prepare the NTC, non-trading concern or consignment. So let's meet in the next session. Till then, thank you so much.